Hello, everyone, and welcome to another episode of Wealth of Patience. In today's podcast, we will be going over the current state of the market and specifically talk about the inflation rates that are at astronomical high levels, as well as what we can do to hedge against inflation. And what is a better tool to hedge against inflation than gold? So I first want to go over the current state of the market. So if you have been keeping track of the markets thus far this year, you would have known that we're in a brutal bear market. Markets are down about 14%. Oil prices and gas prices are at all-time highs. Food prices and any kind of consumer goods prices have increased to a crazy high level. I think CPI, which is the Canada Point Index, has increased to 5%. We are definitely in a recession. I was just talking to a friend, and I know my friend's boyfriend's family had to leave the country, Canada, and go back to their home country because of how bad inflation has hit their homes personally. Like, if you've seen crypto markets especially, you can see people have lost their fortunes, their livelihoods, all of that in the past bear market. So yeah, this has probably been one of the worst crashes in a really long time. And even the best so-called traders such as Kathy Wood from ARK Invest, who manages tens of billions of dollars, she's lost about 50% of her portfolio. Any major bank or investment firm that you know, whether it's BMO Wealth Management, any kind of big investment or corporation that you know, except Berkshire Hathaway, which is Warren Buffett's company, has lost money. So corporations are losing money, billionaires are losing money, the middle class is getting poor, the poor are obviously getting poor. This market has definitely impacted all people to a very large extent. And my dad talked to who was it? I think I don't want to misstate the name, but it was some person of the parliament who was in charge of the economic policies, maybe the economic minister. I'm not really sure, but they basically came to his corporation and told him about 6 to 7 months ago that they'll be increasing their inflation at multiple times throughout the year, just so that it doesn't hit people all in one go. Because if you wake up one day and your milk or your grocery bill goes from $100 to $115, that's going to hit a lot of people pretty hard, especially if that happens for groceries, rent, any kind of consumer goods, clothes, electricity, like any kind of goods. So they want to do it in a gradual basis where people can kind of accommodate for that inflation. Right now, to my extent, I believe the inflation rate in Canada it's at record highs. Yeah, it's at 8.1% right now. 8.1% is crazy. Like 8.1% is unheard of. The average inflation would be about 2 to 3%. Like, that's a healthy inflation number. 8% is not even close to people's salaries increase. Like, to accommodate for 8%, if you're making $100,000 a year in 2021, in 2022 you need to make $108,000 a year. And that's not happening. No one across the board is getting an 8% salary increase. If anything, people are losing their jobs or getting cuts because of the inflation. So, yeah. So, what can we do to hedge against this inflation? I think everyone has recognized the problem. The bank has recognized the problem. Everything has recognized this problem. And what can we do to hedge against this inflation? Before we go with a solution, we need to understand why we have reached to 8% inflation. So why are we at a point where we're at 8% inflation? So the way this works is back when COVID happened, the government needed to do something to pump money into the system, right? Because people were losing their jobs and people were not really making money due to a health crisis. So the government used quantitative easing measures, or basically just printed a bunch of money and gave it to the citizens and corporations through CRB, CSB, all of that. And now at this point, they've given all this money. but everything's not free. If the government gives more money, what does that do? That deflates the value of all the other money that's in the system, right? So what am I trying to say? So let's say in a system that we have of like 10 people, there's $100 in that system. You can buy goods and services for, let's say you can buy a water bottle for $1, or yeah, let's say you can buy a water bottle for $1. If everybody else has, if somebody comes in and gives everybody a lot of money, it's not gonna help people be rich in that society. If anything, it's just gonna drive the prices of the goods and services higher and still leave everybody with the same outcome. So what happens when the government pumps in? Let's say if you were one of the, as a listener, let's say if you were one of the people who got a CRB payment, and let's say you got $10,000 over the course of the year, you and all the other Canadians that got the CRB CSP payment, and that would be a majority of adults. I don't know the exact percentage, but it's quite a large amount. What that does is an excess of money in the system is gonna lead to the increase in prices of goods and services. Obviously, that happens gradually, and government wants to do it slowly. So, over 2020 and half of 2021, the government's primary goal was to pump money into the system, and now their primary goal is going to be to take it back from the system, right? To take it back from consumers and goods back into the government's hand, to ensure that everything is back stable again. And the way they can do that is obviously by raising taxes, but I'm not sure if they would be going with increasing tax percentages, because that might lead to a lot of pushback. But the other way is by increasing the prices of goods and services, because an increase in prices of goods and services, what does that do? That increases the amount of tax that you have to pay. If you're buying a $10 bottle, let's say HSC is 15%, you're paying $1.5 in taxes. If the price of a bottle is $20, you're paying $3 in taxes, right? So by increasing the prices of goods and services, or by increasing inflation numbers or interest rates, you can increase inflation numbers, which increases the price of goods and services, which increases the amount of taxes that you're paying, which again, what that does is helps the budget deficit of Canada. Okay, no more economic talk, and we don't care about the theoretical side. We care about the practical side. So we obviously know everything is falling. Real estate's down, crypto's down, stocks are down, everything is down. What can we do? What do we do to protect our wealth and save our wealth for the long term? And I'm going to tell you from practicality point of view what my family's been doing, what I've been doing. I was on call with a as he's called, the crypto guru on YouTube, if you guys know him, but someone who's pretty proficient in the crypto and stocks arena, and I was on a pretty extensive call with him. I was on a call with a hedge fund owner a while ago. What is everybody that I know doing in this certain situation? Everybody's buying gold and commodities. Why is that? In a time of inflation, the only thing that you know is going to hedge against that is gold. And why is gold so good for inflation? Gold has a store of value. Gold has a store of value that's innate. There's a limited supply of gold, and it's extremely hard to mine gold. So if you're holding your money in your account, let's say you have $10,000 in your account, right? If you're holding that through a recession, just by holding the money, you're losing money. So if you have $10,000, within 6 months, the purchasing power of that $10,000 is going to be $9,000. So the amount of money is going to be the same, but what you can buy with $10,000 today will not be what you can buy with $10,000 6 months from now. And you can see this with, let's say, the price of houses. Like the price of houses 100 years ago were probably in the range of 50 to 100,000 probably. And over the years, it's gone up because inflation happens, and with inflation, prices of everything goes up. Price of food was probably a lot cheaper. Everything was a lot cheaper. People also earned a lot less, right? So that's just how the national system is built, where prices of goods and services go up, and also people's salaries go up. Coincidentally with that. The issue is, in a time of recession, salaries or wages do not go up at the same rate as inflation goes up. So 8% inflation is not the rate at which people's salaries are going to go up. And what that leads is to, there's a gap. So people across the board, every single person is going to be spending more money than they're making, unless they cut down on their spending in over the next couple months. And how do you preserve your wealth in a time of this period? So what my family has been doing is buying gold, and I'll go into exactly how. So over the course of the last year and a half, we've been making, I don't want to say the exact number or amounts, but we've been buying gold bars consistently every single month for about a year or year and a half. Yeah, and recently we've gotten a lot more aggressive with buying gold just with the current prices. And if you look at historically, during any periods of inflation, if you've read any research paper, any type of research that you've done, if you look at prices yourself, like literally search up gold prices and look at gold prices during the 2008 recession, the 2000.com bubble, the 1930 Great Depression, the 1970 recession, like any recession or depression that's happened, the only asset that's retained value during that is gold. So let me give an example of that. Real estate is down, I think, 20 to 30% prices are down in Canada. S&P 500, or the stock market's currently down about 13%. It was down about 23%. What else? Crypto prices, I think, fell by about 40 to 50%. Gold prices, what are gold prices? Everything I said has fallen down 20, 30, 40, 50%. Gold prices year to date have, gold prices in the last 6 months have gone down by 2%. Gold prices have only gone down by 2%, while every other commodity has been hit between 20, or every other asset class has been hit between 20, 30, 50%. So gold prices have only gone down by 6% since the start of the year, or the 2022 crash. And I have a very strong feeling that the prices are going to continue to increase, and throughout the course of the next year or two. And there's a couple of different reasons for that. So I sat down with my sister a couple of days ago, and we conducted a technical analysis of gold. So we drew out support and resistance lines. And if you look at, and you can do this on your own too, if you go on tradingview.com and search up gold, or you can watch a YouTube video on gold support resistance lines. And I'll also be posting a TikTok about my technical analysis on gold if you want to follow TikTok Wealth of Patience. But yeah, there is March 2021. What was the gold price? 1688. That was the support line number 1. Support point number 2 was 1684 on April 1st, 2021. And then I predicted with my sister, I was like, I'm predicting it to not go below that. So I'm predicting 1684 is the lowest the price will go based on the support line and based on technical analysis. And it literally touched 16. It touched 16. Yeah, it touched 1684 or 85. They're exactly right there and bounced up from there, right? And me and my sister had a bunch of limit orders placed on there. And those got filled. And obviously, I think over the past couple of days, it's gone up by 2-3%, which on a $10,000 investment would be like $200-$300. But yeah, I have a very strong feeling. Right now, gold prices are about 1765. Obviously, no one knows what prices are going to be, and no one can time the market. But the only asset that I believe will be retaining value over the next couple, like at least the next 6 months to a year, is gold and commodities. The other one would be silver. We have bought a bunch of silver as well. Gold is more historically known as the best asset for inflation because of its unique property of how hard it is to supply, like how hard it is to mine gold. I can also give a couple of recommendations on different ETFs, but obviously do your own research. GLD is used to be the largest ETF. So let's say you don't want to buy physical gold, right? What can you do if you don't want to buy physical gold? Buy an ETF. Go on your stock platform if you have a stock brokerage. If you have an RBC, BMO, any other bank, you can go through their platform and invest through there. But you can buy an ETF, which basically what it is, it's an exchange trade fund, and you can track the gold prices. So if gold goes up by 1%, your ETF is going to go up by 1%. So you're going to make 1%. If gold prices go down by 5%, your value of your investment goes down by 5%. A lot of people don't want to buy physical gold. So an ETF is easier to just buy because there's little to no commission fees mostly. And it's easier to store. You don't have to worry about, where do I put my physical gold? Like, I don't have anywhere to store in my house. You can just buy and sell whenever you want. There's liquidity. Let's say if you have a gold bar that you've bought for like $2,000, where are you gonna keep that gold bar, right? Like, storing that, a lot of people keep it at a bank, but again, now you have to pay bank locker fees. Or storing it at a house, you're gonna be scared about it getting stolen. So where are you gonna keep those gold bars? With an ETF, you don't have to worry about the physical storage of the actual gold bar, and you know that there's going to be gold for the ETFs. Also, when you buy the ETF, so GLD is one. There's another gold ETF by BlackRock. BlackRock is the company. What's the company? Yeah, it's called CGL. Yeah, so that is the other iShares Gold ETF, which is by BlackRock investment firm. I would look into GLD for sure though, but buying gold would provide you a hedge to the inflation. That's it. That would be a big learning curve, and I think every person that's in the inflation right now and is wondering about what they can do to preserve wealth, especially if you have some money saved up and you would like to preserve that wealth, I would 100% look into buying GLD, and if you can, buying physical gold. But buying the GLD ETF or buying the physical gold would give you an upside and help you at least not lose money. Because the problem is, just by having money sitting in a bank, you're losing money. Like, if your money's not working for you, you're losing money. And that's true throughout, because inflation is always 2 to 3%. But in a recessionary period like that we are in right now, where we're losing 8% of our purchasing power every year, like, that's insane. And especially if you have $10,000 saved up, like, imagine your $10,000 is worth $9,200 tomorrow, right? Like, I don't think anyone wants that. And if you and investing in gold will not only keep you at base minimum, but it would increase your percentage returns, because the probability of gold decreasing in value is quite limited. And people often go, and the thing is, a lot of people are going to go towards gold. So it's not just going to be you specifically as a listener. Whether or not you do it doesn't matter. The overall market is going to shift towards gold, because that's been the historical measure of what people go towards during gold. Is gold. And the other commodities would obviously be silver and copper. But gold is the most universally known commodity. I think that's about it from my end. My biggest takeaway, if anyone's listening, one key action item is, if you're on your phone or anything or on your computer, just listen to this podcast. What I want you to do right now is search up gold inflation and learn about, or just research about, how gold is used as a hedge against inflation, and how investing in gold is probably the best thing you can do with your money during an inflationary period. And if you'd like, buy a GLD ETF or some physical gold. But the most important thing is being equipped with the mindset of understanding what to do in a time of crisis. This is Wealth of Patience, and I'm obviously always recommending long-term advice. And I don't think there is any other long-term investment that is as safe as gold, especially in the times that we're going through today. That is it from my end. I hope you loved this episode, and I'd see you really soon.